G'day folks, welcome back to Pete Investing. It's February 8, 2024. This is the natural gas price analysis. Also looking at some ETFs including BOIL, BOIL, UNG and KOLD. Overall the chart's showing a bearish momentum. We've broken through our previous support and now forming a new Elliott wave support level. We've also got a divergence to look out for on some of these. So first we've got the natural gas price. We've got the weekly, daily and hourly. And on the weekly you can see our CCI 400 down here is still pretty much trending sideways to bearish. Our ADX 25 is trending bearish as well. And the CCI 150, our divergence indicator, is also trading in line with the price. Although we do have to look out for those diversions like it did back here. Always pay attention to those, and it's fallen off in both those instances. There were two separate bearish divergences on the weekly there. On the daily, we're showing likewise bearish on the ADX, bearish on the CCI 400, and the CCI 150 is also moving in line with the price, no divergence. We did have a bearish divergence there, fell off quite significantly after that divergence played out. On the hourly, now we did have this support previously at 2042. We're going to move that down to this new support level. That's at 1960. Now you'll notice here on the, let me just blow this up, here on the CCI 150, that's still showing a bearish divergence. So if I move that to that new low there, that's still just above that previous low. So long as that's at least flat, or at the very minimum flat or bullish, and the price is moving lower, we're going to consider that as a bearish or bullish divergence. That price there is lower, so that now coincides with that new support we've just drawn at 1960. Do also notice though the ADX and the CCI 400 is still trending downwards, so that no sign yet of a pullback. This is our pretty much last step, if you like, before we see further potential downside. If this breaks below that level there, we're going to see a much stronger decline. So at the moment that bullish divergence is the only hope for a potential bounce for natural gas. Next we're going to look at ProShares Ultra DJ UBS BOIL. Again, you can on the weekly you can see it's bearish on the ADX, somewhat bullish, and a divergence on the CCI 400 and likewise the 150, and the price is actually declining ever so slightly. On the daily, it's bearish on the ADX and again bullish on the CCI 400, and I've got this bullish divergence moving on the daily chart. You can see there new lows versus the CCI 150 is still making higher lows, which is a bullish divergence. On the hourly, likewise bearish on the ADX, bearish on the CCI 400, and our only hope is here for this CCI 150 to remain above its entry level there, even though the price is still dropping, so that could start to be a new bounce from there. I'm going to leave that support level there. There's no sign yet of a Elliott wave support area, a retrace at this point, so I'm going to leave that one there. United States Natural Gas Fund, UNG. Again bearish on the CCI 400 and the ADX on the weekly, somewhat neutral on the CCI 150. On the daily we've got a bearish indicator on the ADX, somewhat sideways on the CCI 400, and got a very small bullish divergence currently playing out on the CCI 150 versus lower lows on the price. So again, just look out for that for a potential bounce. Again, if that breaks below the entry level, we're going to invalidate that bullish divergence. On the hourly chart, bearish on the ADX, bearish on the CCI 400, and somewhat flat, if you like, on the CCI 150 versus lower lows on the price. You'll notice that other support there at 1896. I'm going to keep that there. No other signs yet of a support to be redrawn. And on ProShares Ultra Short Bloomberg Natural Gas, KOLD, bullish on the ADX, bullish on the CCI 400, and making new highs on the CCI 150, or higher highs I should say, on the CCI 150, which moves in line with the price. On the daily, bullish on the ADX, bullish on the CCI 400, and we've got this bearish divergence playing out currently. So again, this is going in the opposite direction, so as the price rises, in this case, we want to see this CCI 150 remain below that entry point there. On the hourly chart, bullish on the ADX, bullish on the CCI 400, but again we've got a bearish divergence on the CCI 150 versus the price, new higher highs on the price. So again, as long as that remains lower than that point there, we're going to keep that in that divergence in play. Just a little trading idea for you. I'll go back to the natural gas price. So we'll trade this off the hourly chart. So if I maximize that, you'll see here we've got this bullish divergence on the CCI 150. And a couple of trading ideas. One is, again, only trade in the direction of the overall trend. Here we're going short, so the weekly, daily and hourly are also showing short signals. So just be aware of that bullish divergence though. But going short, one strategy would be to look at the CCI 150 breaking below the zero line. So you can see there that CCI 150 broke below that black zero line. That's where it sells. And the exit strategy would be when it breaks below the minus 100, which is what it does there. Now in some cases, it showed a break below there, but it didn't actually hit the zero line. So it broke below the zero line there, but it didn't actually hit the minus 100, I should say. And it retraced back up. So you could have actually done a couple of things, either used a stop loss or average it down. So in this case, you would have averaged down, would have held two positions. And in this case, you would have closed out with a nice little gain once it broke below the minus 100. But you will notice in this case, it's dropped down to that below the minus 100, and it's actually remained below the zero lines. And it's actually another, let me just delete that Fibonacci. There's another sell signal there because it actually touched the zero, then it fell down again, and it closed out again there. But it remained below the zero line, and you would have missed out on those little gains. So that's the pros and cons of that strategy. Another strategy to look out for would be the zero lagging indicator. It's got a lot more entry and exits. So for example, a zero lag indicator is basically a moving average indicator, a zero lag, and each of these signals shows a sell signal and a closeout or a buy signal. You can see there the overall trend. You would have gone in and out multiple times. Some of them would have been during that rise there, you would have been using stop losses and gotten out. Other times you would have gotten out with some nice little gains. But overall, it's a lot more volatile and a lot more ins and outs of trade. So just again, using your trading strategy, just a couple of ideas to potentially adapt or adopt in your strategy. And again, this can be applied to any time frame. I'm just showing you here on the hourly time frame. You can apply these on the daily or weekly or whatever time frame you choose. I'm just giving you the example on the hourly time frame. So some economic outlook points to consider. Look at storage levels for natural gas. While currently comfortable, significant withdrawals for winter heating and could tighten supply later in the season. Geopolitical concerns, ongoing tensions in Ukraine and potential disruptions to LNG exports could impact global supply and prices. And weather volatility, continued cold snaps could further push prices up, while milder temperatures could bring relief. So again, just be aware of the overall bearish trends for these ETFs and the commodity. Watch out for those divergence. We've got a new support hit with the declines in the price, and also a couple of trading ideas for your consideration. If you like what you saw in the video, hit that like and subscribe button, hit that notification bell. Thanks for watching, and see you in a future video.